Let's talk money.
Hello and welcome to this week's edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Women and money. It's an important issue. Sometimes it can be a tricky issue. But today we are here to explain why this issue goes well beyond just the money you have in the bank. It's about liberation. It's about the freedom to pursue your dreams and the confidence of having financial security, which enables you to face all sorts of potential life situations. Yes, ladies, we need to talk money. And joining us to do that today are Suranjana Borthakur for Mirai Asset Mutual Fund, as well as Mrin Agrawal of FinSafe India. Ladies, thank you so much for joining in. Great to be speaking to both of you. We have Suranjana right here with me in the studios, and Mrin is joining us all the way from Bengaluru. So welcome to the show. And three women talking about why more women need to talk about money. This is an interesting one. Opening thoughts, Suranjana. You've been in the financial services business for a long, long time. You're talking to a lot of clients, I'm sure. So where have we reached in the journey of more financial awareness and more control that women are willing to take on their wealth and finances?
Hi, thanks, Surabhi, for having me on this show. I think the journey has started, and I would say a lot of trends are changing in the mutual fund industry now. You know, if you see in terms of participation of women earlier, it used to be much, much more limited, and people would also have apprehension in terms of, starting off with the journey. I would want to say one thing that, whether people are working or not working or, dependent on someone, it should not be, financial dependence should not be confused with financial, literacy or ignorant. Being ignorant is not what is okay. You have to be able to upgrade yourself. A lot of times the journey of women in India have been where there's some untoward event that happens or they lose some loved one in the family. That is when they suddenly get aware and suddenly start, really learning more about finance. Maybe that should not be the journey. The journey should start early. You should start getting involved in financial conversations at home. Whenever, whatever assets, liabilities, debt, whatever is there in the household should be a thing which needs to be discussed by both parties, the men and the women. And once they do that, it is also important to have certain assets in the woman's name. I have had situations where I have heard from friends who, went through a divorce situation and they knew that all the investment is in the man's name. And, it was a discord which could not be resolved, and which is where this lady had to start from zero, which is something which can be very hurtful. So it is important to have assets in your name. It is important to know about the documentations. A very basic part of the journey is knowing about the bank accounts, knowing about your insurance, knowing about how do you go about, taking care of things if somebody is not there to help you. It's also important to actually understand that, when you build for the future. You do not just build for today. You have to know that if you're saving up for your retirement, for your child's education, for your own, whatever you want to do in terms of your journey. It's a long-term thing. And also to keep probably reviewing things, while you are doing that. It's also when you identify your mistakes and then you correct them and then relook at it. It's a very different way.
I think you gave us a very powerful headline to begin with. And this applies to a lot of women who are not earning. Maybe they're dependent on, the members of the family, their husbands, spouses, father, brother, someone else, perhaps a sister. Financial dependence does not equal financial illiteracy. Just because you're financially dependent doesn't mean that you can be okay by being financially illiterate. That's a very powerful statement. And thank you for putting that on the table. Mrin, I know you folks were also doing, I think, a survey amongst a lot of people that you work with, women that you work with. Can you tell us if anything interesting came out, and what are you seeing around you when it comes to women taking more ownership of their finances?
So good evening, Surabhi, and it's lovely to be on the show today. I do see more and more women. So in my last, I would say 29 years of journey, 20 years of being an advisor and then being an educator, I would say that a lot has changed in the last 5 years where women are taking more interest in managing money, are, I would say, prioritizing it more because they understand that at the end of the day, you need money for everything, right? So that's a good thing. But again, of course, I would still say that a lot of the typical investor mistakes that we see are still happening. But the good thing is that women are slowly prioritizing money management. And one of the surveys that we do on an annual basis is among working women professionals. And one of the findings of that survey was that 68% of the women actually said that they're not sure if they have enough for financial needs. And then a lot of women were also very worried whether they have enough for emergencies. So I would say that while these worries exist, the good thing is that people are thinking about it and want to do something about it.
Absolutely. We've got that chart up on the screen right now. So, I mean, the issues that dominate women's mind when it comes to their own finances is a good thing. At least they're thinking about it, right? So, saving for life goals, saving for emergencies, these are some of the top priorities that women have spelled out. And we are here to try and sort of answer some of those questions and help you get to those targets. So, let's break this down to make matters a little simple. Between women who are earning, so they're dealing with their own money, and those who are not, so therefore they're part of maybe the family wealth, or like I said earlier, could be dependent on others for their, financial goings on. So starting first, Mrin, with the former category. Now we're talking about women who are earning. What are the bare basic house rules that you would like to put on the table when it comes to just taking ownership and not overlooking things that can be very, very important later on in life?
So the first thing that I would say for women who are earning, please do not equate financial independence with economic independence, because a lot of times I see that women feel that we're earning money, so we're financially independent. No, if you're earning money, it's great, you're supporting yourself, but financial independence is really about having enough to meet all your financial goals and all of your expenses, right? Now, in order to get there are a few basics that you need to keep in mind. And, I would say that today we really need to work backwards and work on these basics, because what I'm actually seeing is that there's so much focus on what fund to buy, what stock to buy, that we've forgotten the basics. So the basics is really about having a budget. And I know it's not the most interesting thing to do in life to budget, but it is important to do so. And it's very important for you to track your expenses, because, one of the focus areas needs to be about putting the right amount into investing. So everybody is investing, but are you actually investing the right amount? And I would say that right amount is 30 to 40% of your take-home income, right? The second
The reason I'm laughing is that a lot of viewers, including, the younger viewers, even middle-aged viewers, will say, what is Mrin saying? 40%? But we're going to come to that math. I know you have an example, and we'll come to that, because that investing point is really important. But actually, Mrin, allow me to club a viewer query with this question, because we're talking about independent earning women. So there's actually a question that's come in. So let me throw that back at Mrin to answer. This is a query from one of our viewers, Asha. She's 33 years old. She's written to us on Instagram, and she says that I'm a working woman right now. I don't know about my next life choices. I'm not sure if I remain single or what happens. But please tell me the basic steps which will help me build a secure financial plan. So, Mrin, there you go. Now, here is Asha. She's asking you exactly that question that you were talking about, that earning is not equal to financial independence. But Asha actually wants to get there. How to get a robust financial plan going. So please continue.
Okay, so first is, of course, do the budgeting and ensure that your loans are limited to 30% of your take home, and you try to save at least 30% of the take home. The second thing is that you need to ensure that you have financial security, and financial security in form of having an emergency cash, which has 6 months of expenses, and having enough insurance. So again, Surabhi, it's very commonly seen that everybody has life insurance and health insurance, but is it the right amount, right? So two things, what I would say is that please focus on health insurance in a very big way. Our own survey found that a large majority of women had not thought about what's going to happen to their health insurance in case if they decide to stop working, right? And in today's environment, given the medical inflation and giving the medical expenses, I would say that you need to have at least 10 to 20 lakhs of medical insurance, which means that have the employer insurance, but you need to think much beyond the employer provided insurance and have that external cover. Since you're only 33 right now, the cover may not be so expensive. You can look at some of the super topper plans that are available, because they turn out to be much cheaper. So this is on financial security. And then, of course, you do need to work on a financial plan based on what your goals are and decide your investments based on that. So, I mean, I would highly recommend that you work with a financial planner for that.
No, absolutely. Let me come to you, Suranjana, on this as well. Both the categories. Like you mentioned, that even the non-earners, they need to take more ownership. But even for the earners, what are the basic house rules that you would want to put on the table as a finance professional?
See, I would like to put across a thought that I think, firstly, women need to have a mindset change. I think what happens with women is they think this is not their job. This is something that they're not good at. And I think this is a lot to do with the social fabric that we come from. I think we, as a country, we have evolved from, joint families where having a conversation about money was not the most pleasant thing. Women used to feel that if they have a conversation, firstly, they're ill-equipped and they don't have enough information, and men do the job better. Or they also feel that there could be a certain level of mistrust that could build in if you talk too much about money. So dinner table conversations were never about money, so which is where we come from.
Yeah.
But now things are changing. People are actually seeing that. I notice one thing which happens, a number of women investors may go up, but a lot of times the decision making is not done by the woman. It's actually, like you mentioned, the father or brother or spouse, somebody who's taking the decision on their behalf. But women are actually taking so many important decisions in life. They are actually, there's a survey which says that 80% of decisions about children's education is taken by women. 70% of all household decisions are taken by women. In fact, women are doctors, lawyers, corporate honchos. They take so many important decisions, but when it comes to finance, they sort of take a back step. So I think firstly, the thought needs to change. That once you can actually start thinking how you take control, you can actually look at the space very differently.
Sure.
But when you start with the journey, I think it's very important that you start with a learning. Like what Mrin also mentioned, the fact that you have to be aware of what the budget is, how you want to manage very basic things like budget, saving and investment, the difference between the two. A lot of people are not really thinking through it.
Sure.
It's also important to start small. A lot of times people feel that I don't have enough money to invest, so I'll invest when I do have the money. But it's not about the quantum. It's about starting small and starting early. It's also about professional guidance. A lot of times, in fact, survey says that women are more akin to taking advice from professionals. They actually believe friends, family also, but advisors are a great way of, going for women. So that is something, again, they can think of. I think for women, community learning or, actually women coming together and discussing their issues and actually helping each other learn is something also which is very strong. In fact, they say that men always look at digital medium or other mediums of learning, whereas women actually go by somebody else's advice. So which is where community learning or camaraderie is
and
something
we love to
that
talk.
we
so
love to talk.
Why don't we talk money? Absolutely.
Exactly. And also, I think it's important that women think long term, because I feel women are more committed when they think of a goal and they think of being disciplined, they actually commit to it.
Sure.
Which is why long term, any plan that they make, when they look at a goal, it becomes much better for them, and then review it.
Absolutely, great points.
Frequently.
Absolutely. So we've set the basic house rules in order. Now we come to the specifics. We'll take a break, and after the break, we prep you up. Whether it's creating a safety corpus, whether it's starting on that investment journey, or the bigger goal, planning for retirement, we've got some solutions for you after the break.
Let's talk money.
Welcome back. You're with us on Let's Talk Money, and this week we're talking about how women can get smarter with their money, and it all starts by taking more interest and then taking ownership and charge. Well, now we are going to talk about 3 stages very, very quickly: creating that safety net, then coming to the investing journey, and then talking about longer-term goals like retirement and give you a sense of how you can go about it. So, Suranjana, let's take step number 1, which is having a safety corpus in place. How do you do the math? And then do you leave this money in the bank, or should you go the mutual fund way, look at maybe some debt funds, but ensure that, you get the money when you need it?
Yeah. I think very important, like I mentioned earlier, that to start early, because a lot of times the trigger is to start when an incident happens. And that is something that we need to really think about. we also need to think about that, when we look at the corpus, we have to have a growth mindset. You cannot have money lying in your savings account, and because that is not going to earn you enough money to be able to build a corpus. It's also important that you actually build a resilience, like building a corpus which actually takes care of your insurance or takes care of your emergency requirements. That is extremely, extremely important and a complete non-negotiable. It's also important that you review this, whatever you are planning. It's important to have a check in place, and periodic checks will also tell you if you've made certain mistakes and you need to correct them over a period. I think mutual fund becomes a great tool to actually look at. See, essentially mutual fund's purpose is to get everybody's money together and give it to an expert. The fund manager is the expert who's managing it on your behalf. See, you don't need to be the expert there.
Yeah.
The other thing is that, in India, mutual funds are a very egalitarian solution. It does not differentiate between a large investor and a small investor. So that is something which is very important from a point of view that anybody can start investing. You don't need enough corpus to start. You can start with very small amounts, and then you can also sort of diversify your risk, because there are so many vehicles which are available to invest within mutual funds.
Absolutely. So plenty of options there, and you can
options.
start with the funds that are right for you and get the right advice on it as well. Actually, speaking of starting the investing journey, we have a query coming in from another viewer. Shilpa wrote in to us, and she's saying that, and actually it was a pretty lengthy query. For the sake of keeping it short, we've sort of made it a little brief. She's saying that she's actually a homemaker and she's been investing on her family's behalf for 20 years, and a fair amount of money is in mutual funds. But she says over the last couple of years, she also did a lot of direct stock investing, and now those stocks are sitting on substantial losses. So she's saying, what is a better option? Should I just go back to mutual funds? And how do I look at the whole investment process? Mrin, let me come to you with this question and with a broader question as well on, using the right investment approach, both to have a safety net and then to start really creating that big corpus. How to go about it?
With respect to Shilpa's query, what I would like to say is that, it's easy to buy stocks when the markets are going up, and it's difficult to own stocks when the market are down. And I think it's a good time for you to really evaluate these stocks as to why you bought them, what did you see in these stocks, and you really, if you can hold them further or not. You probably would need help of an advisor to do this as well. But in my opinion, Surabhi, I always believe that mutual funds are always a better vehicle, because as they say, that leave the stock picking to the experts. As individuals, it's very difficult for us to figure out what segment is going to do well and where the markets are headed, and all the information that's available is really not enough to take the right stock decision. So I would always say that mutual funds are a much better option. And again, a lot of people get daunted, like when you work on these goal planning calculators, you get very daunted by the amounts that come up in these calculators, right? So what I would say that again, a good way to really lok at increasing your wealth, and again, given the fact that the IWD theme this year is accelerating action, I would say, keeping in mind the accelerating wealth action aspect, I would say a great tool that actually exists today is the Step Up SIP. Right? And if you're finding it really difficult, like you worked on a goal planning tool and it tells you that you need to invest this X amount, and you feel, oh my God, how do I actually do this? The Step Up SIP is much easier. So I'll give an example. Let's say if somebody does a SIP of 50,000 rupees for 10 years, and we are assuming a 12% return. So in a normal SIP, you can expect a value of, let's say, 1.16 crores. But if you say that, I'm going to invest this amount and I'm going to do a step up of 10% every year, wherein I'm going to increase this amount by 10% every year, you're ending up with a much larger corpus of about 1.7 crores, So what I'm trying to say is that, again, move this focus away from saying that I want to get this 15-20% return, right? Focus on two things. One, do you actually have the ability to manage that investment? And two, on the corpus. I think that really needs to be the focus area, for which Step Up SIP is a great option.
Mrin, I want to take a step back. That Step Up SIP example is great because, the accumulation just really improves, right? The moment you decide to commit more. a little more every year. But I want to take a step back. Your assumption was 50,000 crores going into a SIP every month. Let's take a step back in terms of how much we really need to save. Now we're talking about an average woman who's probably looking at retirement and, you know, probably has goals maybe a decade or two down the line. So now what is the math? Tell us the math, because I saw those numbers that you put out. They look a little scary in terms of how much we need to start saving and investing.
Yeah, so actually, on an average, Surabhi, I'll say people need at least 6 to 8 crores of corpus. But let's say you're 30 years old today and you've got expenses of 1 lakh rupees per month, which is easily doable in a city like Bombay, right? And you want to retire at 50. So let's also remember that as far as retirement is concerned, the age at which people want to retire is actually coming down, right? So you want to retire at 50, you will actually need a corpus of 11.5 crores, and you need to invest 1.5 lakhs every month to actually reach this particular goal. If you assume an 8% return, so I'm assuming, let's say you're just doing the EPF, for example, right, which is the Employee Provident Fund, right? But, if you can add some equity to this now, then the investment amount is going to come down to 1.32 lakhs, right, per month, I'm saying, okay? So hence, what I would like to say is that whatever stage of life you are, it's important to start saving, especially if you can start saving early. Then, you have time to basically build your assets, and you need to have a good amount of equity allocation if you want to beat inflation, because remember, the value of our goals is also very high at this point in time.
Absolutely. Those are some sobering numbers there, numbers to definitely think about. Well, it's helpful. At least it puts us on that thinking track. So, Suranjana, I mean, coming to sort of final thoughts and summing it all up, let's say if you were to give the 3 most important tips for women, just, quick checklist, what should they keep in mind when they're planning their finances?
I think most important is to start. The start does not happen, and I think that is where people need to push themselves. There is no requirement of thinking of everything else, all the variables. It is just about taking the plunge. That is the most important. Emergency corpus, like we mentioned, is something which a lot of people don't pay attention to, and that is something, again, which is very, very important. And it's also very important to keep putting a check of what you are doing, rather than just putting some investment and then just completely forgetting about it. While that can have a different result because you're not paying too much attention to the market volatility, but the fact is that you need to have a clarity in terms of what you are going towards, rather than just adding to your investments without a thought in mind. The why is very important, I feel, in investing.
All right, the why is important and starting is important. So at least make a beginning somewhere. Ladies, thank you very much, Amrin, as well as Suranjana. It's been a pleasure having you on the show, and thank you for getting these conversations going. Well, with that, we are out of time. We have to take your leave. It's a wrap on this special edition of Let's Talk Money. Remember, keep sending us your queries, your comments, and any other thoughts that you have. We'll see you again with another theme next week.
Let's Talk Money